section that we will talk about is deductions. And that can be found in publication 4012, tab F. I'll give you a few minutes to go to tab F. Okay. Now, deductions, there are two types of deductions that are allowed according to the law, or legal deductions, I might say. And they are the standard deduction or the itemized deduction. And what this does is it reduces the adjusted gross income so that you can arrive at taxable income. And they are listed on line 12 of the 1040. Again, deductions or subtractions from a taxpayer's adjusted gross income. They reduce the amount of income that is taxed. Most taxpayers have a choice. Either they take the standard deduction or the itemized deduction. And the end result is that we want the taxpayer to take the deduction that is going to result in the lower tax. We want them to take each deduction and every deduction that they're legally entitled to. Now, I mentioned two deductions, the standard deduction and the itemized deduction. Now, a standard deduction for most taxpayers is determined basically by three things: filing status, age, or blind. You get a set amount based on your filing status, but you get an increased standard deduction if the taxpayer is over age 60, well, if the taxpayer is 65 or older, or blind. One caution is there are limitations on the standard deduction for taxpayers who can be claimed as a dependent on someone else's return. And we see this at our tax sites mostly with college students, where there are students, period, where they're being claimed as a dependent on their tax return, but they may have worked as well and earned some money. But when you answer the questions in TaxSlayer, it'll automatically compute this, but you do have to check that box for the dependent that can be claimed on someone else's tax return. And the next deduction that I want to talk about is the itemized deduction. And it allows taxpayers to reduce their adjusted gross income based on specific personal expenses. And if the total itemized deductions are greater than the standard deduction, it will result in lower taxable income and a lower tax rate. Now let's take a look a little closer at the standard deduction. Page F-1 of 4012 outlines the standard deduction for most people. If you are single or married filing separate return, of course, we don't typically prepare married filing separate returns, your standard deduction is $12,400. If you're married filing a joint return or a qualified widower with dependent child, then your standard deduction is $24,800. If you're head of household, then the standard deduction would be $18,650. See the note here. Don't use this chart if the taxpayer was born before January 2nd, 1956, or is blind, or if someone else can claim the taxpayer as a dependent, or they're married filing jointly. We're to look at the stipulations on the next page. Okay, so the standard deduction chart for people who were born before January 2nd, 1956 or were blind. Don't use this chart if someone can claim you or your spouse if filing a joint return as a dependent. Instead, use the worksheet above. Okay, you would check the box that was applicable, whether you were blind or whether you were born before January 2nd or whether the spouse is blind or born before January 2nd, 1956. And in that next box, you would enter the number that you indicated above, whether that's 1 or whether it's 2. So, say for example, if you are a single taxpayer and you are over 65, then you would have 1 in that box, and your standard deduction would be $14,050. Okay. Now, if you had a 2, which means that you were 65 or older and you were blind, then your standard deduction would be $15,700. So the chart breaks it down according to filing status and whether you're 65 or older or blind Now, this is the worksheet for dependents. But you really don't have to worry about this because TaxSlayer is going to work it out for you based on the information that you have entered into TaxSlayer. Okay, that pretty much summarizes our standard deduction. But taxpayers who do not itemize deduction because of the CARE Act, they are now able to deduct up to $300 of cash contributions to charitable organizations per return. And this provision only applies to tax year 2020. Okay, and that would be entered on line 10B of the 1040. Okay. Also, there is another stipulation on line 13, which is the qualified business income deduction that we'll talk about a little later on.